In today's episode, I'm going to rank the best brokers for day trading. I'll be comparing the top 17 most popular brokers that accept traders from the United States, Canada, and internationally. So no matter where you're located, there will be a broker on this list that you could choose. Now, I'm going to be comparing these brokers based on more than 30 individual points of comparison. So this is a comprehensive deep dive. And at the end of this episode, I will give each of these brokers a Ross score. I will share with you whether or not I would use them with real money. So let's go ahead and jump into this broker comparison. Now, when it comes to day trading, one element that we need in our brokers that we just absolutely cannot live without is fast order execution. And that's why order execution is our first point of comparison. So these 17 brokers, here's something that's really interesting. They have wildly different execution speeds. You can see Webull, E-Trade, these are among the slowest, whereas Lightspeed, Guardian, and Centerpoint are among the fastest. So here's the deal. When I see a stock hitting my scanners and it's squeezing up, I'll give you a little demonstration. This is one of my favorite patterns to trade. Stock starts squeezing up. Why is it moving higher? Most likely it had breaking news right here. Let's just say 8 a.m. Eastern Standard Time. It's surging higher. It pulls back just for a moment. We get a little bottoming tail there. And my strategy is to buy the first candle to make a new high. So that right there, let's just say this is $8.10. That's my entry point. So when I see the stock starting to nose up here and pop up to that level, I'm going to send my buy order. Now let's just say that's 10,000 shares. All right, so 10,000 share buy order, and then this thing squeezes up here. If I send that order to the market and I don't get filled at exactly the price that I wanted on a pre-market trade, I'll miss the whole thing. Because remember, pre-market, we don't have market orders. We only have limit orders. So when I send that order, it needs to get filled in an instant. And when I see the stock starting to roll over, I see one of my exit indicators and I want to get out, I want to press that sell button and those shares better be gone. So you can expect that with some brokers, but with others, well, you're going to sit and wait. And here's the deal. Trading is hard enough without using a broker with slow order execution. It just doesn't make sense. So here's how I got this data. On this row right here, we have the execution speed for each one of these brokers. Well, with the exception of Robinhood, which chooses not to publish this data. But all these other brokers actually publish this data so we can look at it. So let's look at Webull, for instance. Webull right here under order execution, on their website, they publish the average execution speed. Now, it actually varies depending on the number of shares that you're trading. So you have to kind of pull the average, but if you pull the average, your average order execution with Webull is going to be, well, unfortunately, fairly slow, 0.12 seconds. But you know what's interesting? I decided to actually take all of this a step further. I funded accounts with these brokers, executed trades, and timed them to see whether or not the execution speeds that they're reporting were accurate. And you know what I found out? Webull is actually a lot faster than I expected. And some of the ones that seemed to be fast, well, according to their reports, were actually much slower. So wow, that adds a little bit more color to this. So here we go. Now on these pages here, for Robinhood, for Fidelity, for E-Trade, they all display their average execution speed. Fidelity says 0.04 seconds. E-Trade is 0.11 seconds, similar to Webull. TradeStation over here at 0.043 seconds. That's quite fast. And Charles Schwab over here at 0.05 seconds. So now these are all commission-free brokers. So the commission-free brokers are supposed to file they have these Regulation 605 reports that they file, which disclose order execution and the quality of the fill. We'll talk more about that in a moment. But this right here is the actual data of how long these orders took to fill. So I'm going to just start by saying that the slowest one right here, it's beyond slow. So this is the slowest, and this is Fidelity. So I'm going to pull up my Fidelity account, and I'm going to show you what it looks like. So we're going to do just a quick execution speed test on this. So I'm going to press an order for buy ask. This is going to be a buy order at the ask on Ford, just for 10 shares. I'm going to click the buy button. The way I time these orders is the second I lift my thumb off the button, it's going to change from this sort of click down to the popped up phase. So when it changes like that, that's when my second timer starts. And then on Fidelity, it'll say right here the order is filled long before it actually displays in the position window, which is really kind of silly. So in fact, for me, the way I time Fidelity is I go like this. I click right now, and it shows open and then filled at 9:46:05. But it's not showing in my positions window, right? It's not showing. There it goes. So that took a second. So when we actually time that, and we'll go sell, we'll do sell bid, and we'll flip around and just get rid of that position. So I click, I sell, it fills, it's still sitting there, it's still, and then it's gone. So when you actually time it, you pull it into the video editing software like I did here, and you time it down to the second. This is how long it took for the actual position to update. That is way too long. Now, how long it took to actually fill the position was this line right here, because it shows that it did fill, it just took longer to update. So that is Fidelity right here. So Fidelity came in at the slowest. The second slowest with real testing, real money, Robinhood. The third, Webull. The fourth, Thinkorswim. The second is Interactive Brokers. The third is TradeStation right here. And now wait a second, there's one more. That right there is Lightspeed Trading. So this also puts it in perspective. This is Lightspeed Trading right there, that broker. That right there is Lightspeed Trading, order execution. And then there's Fidelity. Holy smokes. I mean, we're talking about a completely different ball game here, right? In terms of execution speed. So now let me just say one thing. Let me say two things. The first thing that I want to say right now is that I have zero affiliate relationship with any broker dealer. So I'm not paid to tell you one is better than the other. It makes no difference to me which broker you use, except that I want to see you using brokers that allow you to extract profit from the market, which means, in my opinion, you need a broker that is super fast. So the broker that I'm choosing to use is Lightspeed. It is fast. It's the fastest of the brokers I've tested, but I do pay a commission there. So I pay a fee for that speed. With commission-free brokers, you get free commissions, but the sacrifice is on execution speed. Now, that might not seem totally intuitive. Why would it be that free is slower? How does that translate? Why is that the case? Well, let's jump back onto the whiteboard here, and let me help you better understand this. So the brokers that are on this comparison sheet really fall into two camps. On the one hand, we have brokers that are commission-free. They charge zero commission, but you'll notice that for all of them, the order execution is a little bit slower. So the second line item here is commissions. Commission for options, commission for stock. So these brokers here are all commission-free, except for Interactive Brokers right there. So these ones are commission-free. So you know what, I'll just go ahead, I'll bump one column to the left, and I'll just move Interactive Brokers IBKR Pro, and I'll put it over there, just so we're all grouped together here. All right, so I'll insert one more column to the left. So all of these brokers here are, and I'll just make this white, all of these brokers here are commission-free. So the fastest commission-free broker that I timed is TradeZero. TradeZero USA, TradeZero International. Webull, well, they disclose that they're the slowest, but actually in my own testing, they weren't that bad. Now again, these just my tests, so it obviously will vary, and I should assume that their results are going to be the most accurate because they're obviously compiling and aggregating thousands and thousands of trades, whereas I'm just taking a couple of sample trades that are my own. So I could take their word for it that on average, this is their speed. And I should do the same with Fidelity. On average, that's going to be their speed. Even though my experience was a little bit different, that probably is the typical experience. So nonetheless, these brokers at the fastest are 0.035 seconds. Whereas Lightspeed, Guardian, Centerpoint, Cobra, CMEG, Ocean One, and Interactive Brokers here are all significant. Well, Interactive Brokers is kind of on the cusp, but the rest of them are all quite a bit faster. So the reason for this is because of the way orders are actually sent to the market. So we're going to take a moment and I'm going to help you understand exactly how market structure works. By the way, my name is Ross Cameron. I am a full-time trader and I funded my first account in 2001, more than 20 years ago. So I have a unique perspective here, having traded for so long, having used dozens of different brokers and platforms to be able to share with you what I think are the key features that you need in order to extract profit consistently. So now let's go ahead and jump onto the whiteboard. I just wanted to introduce myself for those that perhaps are tuning in for the first time. Okay, so this is the way it works. This is you right here. This is your broker. And we're going to do this kind of in the old days. This is the market here. So this is actual Wall Street. This is the exchange right here. So NASDAQ, New York Stock Exchange. So in the old days, this is your grandfather, your grandmother. They had to call their broker. And what did the broker do? The broker had to call their trader that was on the floor, and their trader walked over, got your shares, came back, gave it to the broker, and so on and so forth. Now in the 1990s, we had the release of electronic trading platforms, and so all of this became electronic. So you, instead of having to actually call your broker, you're using, now at this point, an app or a desktop platform on your computer. So you send the order to the broker, it goes electronically to the exchange and comes right back. Now, what you may not realize is that the exchange has to make money. So they need to make money to cover all of their operating expenses. And the way they do that is by charging a fee on every share that goes to and from the market. So the fee is per share. So whether it's 1 share or 100,000 shares, your rate of what you would get charged is based on the number of shares you trade. So the broker has to pay that fee. So in the past, we used to have to pay our broker a commission of like $9.99, right? Old TD Ameritrade, it was $9.99. Old E-Trade, before commission-free trading, this is how much we paid. And then there was something that changed. And this is the payment for order flow business model. So payment for order flow works a little bit differently. You have market makers, which are institutional traders. So institutional trading firms, these huge financial institutions, what they decided to do is they actually went to the broker and they said, hey, we got an idea. Instead of sending all your orders to the exchange, can we buy all of your orders? You send them all to us. So we will execute the orders essentially on our own. It's like an exchange, but they actually call it an alternative trading system, an ATS, or a dark pool. So the institution is going to fill all of the orders here, and those orders actually don't route out to the market. So how does this work? Well, the institutional traders are actually essentially scalping fractions of a penny on all of those orders that go through. So instead of the exchange making money, now the institution is making money on the actual trades. So because they're making so much money, they pay the broker in payment for order flow. So the broker's now getting paid. They're getting paid enough that they realize, wait a second, we could get rid of the commission. And if we get rid of the commission, you know what that's going to mean? It's going to mean more trading. And more trading means more money. So now there's this relationship where the brokers are really trying to encourage more trading because higher volume means more trading volume going to the market makers in payment for order flow and more profit to them. Now, because of the inherent potential for a conflict of interest in this relationship, the brokers are required to file disclosures which disclose the following: execution speed and quality of execution. So the speed, well, we understand that. It's pretty obvious. The speed is slower than brokers that currently allow you to send your orders straight to the market. So this is now where we have the free commission brokers down here, free com brokers. And then we have the, I would say, direct access brokers. Even if it's not exactly direct access, we're just going to sort of call it that. These are the brokers that send your order directly to the market, but you still pay a commission plus fees, right? You still are paying this fee, but what you're getting in exchange is fast execution. Now, I know this looks like a little bit of a crazy whiteboard, but hopefully you're able to follow along with that. So these commission-free brokers now are filing their quarterly disclosures, which are what I pulled right here. This is where they're actually saying how fast your execution is, except for Robinhood, but all the others display the speed. And they're telling you the execution price improvement, which means essentially the argument here of why a retail trader should use a commission-free broker is that you get commission-free trading, so you're saving money, and the institutions that are doing payment for order flow can do something the exchanges can't do. They can split the penny. So if you've ever looked at a stock trading on one of the big exchanges, and I'll just pull up my orders right here. So XNet, this stock right here, 391 by 392. right? A 1 cent spread. So if you bought 10,000 shares and sold it across the spread, that'd be $100, right? It's a $100 spread with 10,000 shares. With 100,000 shares, it's a $1,000 spread. And so what the alternative trading systems are doing is they're actually able to cut the penny in half. The exchanges can't do that. Transactions can't go through between the spread. It's the spread, which is 1 cent. But the alternative trading systems can. So what they essentially do is they split the spread. So now on 100,000 shares of volume, which just one trader like myself might do 500,000 shares of volume. So they could make, potentially, they wouldn't make $5,000, but maybe they make a third of that. Maybe on one trader like me, they could make $1,500 a day. So I'm getting a little bit of that kicked back to me in terms of when I press the sell button, instead of getting filled at $3.91, I'm getting filled at $3.91 and a quarter of a penny. So on 100,000 shares, I got $250 of, quote, price improvement. I got a little price improvement. The broker made a little money. The alternative trading system and the market maker made a little bit of money. And the person who sold the stock also made a little money. So everyone seems to win. And the big loser in all this is the exchange. And that's because the exchange doesn't allow trading below 1 cent. So if they really want to eliminate payment for order flow, they would probably change the rules and say that the alternative trading systems can't split the penny. Or they would say exchanges can split the penny and then it's even. But until that happens, it hasn't happened yet, and it might not ever happen, this is the arrangement that we have. So payment for order flow, so at the end of the day, traders who are using brokers that offer payment for order flow are getting something of real value. If you trade an average of, let's say, so let me pull up the price improvement. So this is the column for price improvement. So all of these brokers here have no price improvement at all. You don't get price improvement because it's not a commission-free broker. But with Webull, you get 31 cents of price improvement for every 100 shares. 31 cents. Okay, so you know what? Maybe that's not a lot of money. Maybe it's not enough to make it worth using because the order execution is slow. Trade Zero, they don't publish the exact amount, but they say you get improvement on 25% of your orders. TradeStation gives you price improvement of $1.29 for every 100 shares. So now you do 1,000 shares, that's $10, $12 of price improvement. You do 100,000 shares. I mean, this starts to add up. And so in a sense, you could start to get paid to trade because you get to split some of the profit from the payment for order flow relationship. So just for the sake of argument, let me show you what it looks like to get paid to trade by a commission-free broker. All right, so I'm gonna pull up Thinkorswim here. Now, the Thinkorswim platform, as we said, I'm not a fan of it. I think it's too slow, it's too clunky. I don't have my hotkeys. So one of the other points of comparison that we have to look at for all of these platforms, we've got number one, execution speed, we've got number two, commission, and then the third that's really critical in my experience is the platform UX, the user experience, the ability to use hotkeys, the ability to see level 2 and everything else. So I'm gonna pull up DAS Trader. This is software that I have integrated with my Thinkorswim Charles Schwab account. So instead of using Thinkorswim, I can execute all my trades right here. And I'm gonna show you forward. So right now I'm up $2.94. And let me just show you what happens if I start trading this. So I'm gonna start buying this right here, and I'm gonna use a hotkey. I could do Shift 1 for a hotkey for 10 shares. So now I'm gonna start buying it. I've now got 100 shares. Now I'm gonna start selling it. And look at this, now I'm up $3. You see this? $3.97. Do you see how I'm actually making money right now? Doesn't seem like that should work that way. But in fact, it does. I'll mute my speaker so it's quiet. So this is kind of crazy, but the reason that I'm able to make this money is because of payment for order flow. So the broker, my Thinkorswim, Charles Schwab, sends the order through the wholesaler, and the wholesaler splits the penny. So they get a little bit of profit, I get a little bit of profit, and the person I'm buying the shares from gets a little bit of profit. So essentially, you've got, and I'm going to cancel these open orders. There's a few still out there. So you've got people that are, it seems like everyone is making money in this relationship except for who? The exchange. So now at this point, you guys have a great understanding of market structure, and you recognize that you don't get fast execution and commission-free trading in one package. You really have to choose one or the other and prioritize one of the two. For me, For my day trading strategy, I prioritize speed and I'm willing to pay the commission. In fact, I believe, and I'm quite certain of this, that the cost that I spend in commission is less than the amount of money I would lose as a result of simply missing opportunities. Because when I've used commission-free brokers, while some of them are faster than others, even the fastest ones, they just don't compete with direct access brokers. So you could see again just on here. I mean, this is what we're talking about. We're talking about, you know, just such a big multiple of speed difference. It's you just can. I mean, you can compare it obviously, but it really doesn't. It doesn't compare. The only reason anyone would choose any of these other brokers is because they're free. That's their compelling. That's their advantage. That's their offering. And the reason that people continue to pay for brokers like these ones here is because they're fast. It's because of the speed. That's what you're paying for. Okay, so our first point of comparison was execution speed, and our second was commission. And there was a lot to cover on that because it's not totally black and white to most beginner traders why there's such a wild difference in commissions and execution speed. All right, so then the next thing that we have to look at, in my opinion, is platform user experience. Because you could have fast execution speed and you could have relatively reasonable commissions, you know, whatever. But if you don't have a good platform, none of that matters. If you're using software that crashes repeatedly, obviously, none of the other things matter. So these are sort of the three most critical components: execution speed, commissions, and your platform user experience. So we're going to scroll down on this sheet a little bit. I grouped the most important platform UX features right down here. The first one is we need to have level 2 market data. That's the depth of the market. That's critical. I think that goes without saying, but for some of you, that may be information that's new. So level 2 data is critical, and you get it basically everywhere except on Robinhood Legend and IBKR Lite. Both of them, I think it's coming soon, but it's not here yet. Now, the second is hotkeys. Hotkeys are what I was using on Dash Trader that allow me to execute orders with the press of a button and are super fast. They are critical. And while you have them to a limited extent on Thinkorswim, they're not functional to what I need. You also don't have them on IBKR Lite, you don't have them on Fidelity, and you don't have them on Robinhood Legend, which is crazy. So these three brokers really are completely off the list. Like, they're just on the side because they're not even worth considering for me. The next point for UX is hotkey offsets. A hotkey offset is when we say, I want to buy at the ask plus 10 cents. And the reason we would do that type of order is because during the pre-market session, when these stocks are moving quickly, if there's only 100 shares for sale on the ask, but you want to buy 1,000, you need to make sure that you can not only buy the 100 shares for sale at the ask, but you can buy the next 500 shares or 1,000 that are a couple of cents higher. So you need to set your order so it's a limit order to buy ask plus 10 cents, or whatever the case is. I use ask plus 10. So if I can't do an offset, then I'm not going to be able to trade the way I want to trade. And that's what puts Charles Schwab with a Thinkorswim platform out of the running for me. So the only way I would use Charles Schwab is by integrating with Dash Trader and spending the extra $175 a month, right? Now, the third or fourth point of comparison is the ability to sell based on a percentage of your position. So if we pull up a Thinkorswim here, or Charles Schwab here again, I'm going to take kind of some odd positions here. So I'll take 10 shares, and I'll mute the audio here. So I'll add a little bit more. So now I've got 60 shares. I'm going to press Control X, and that's going to sell half my position. Gone. 30 shares. Sell another 30. Gone. Sell another 15. I'm selling in halves. So see how it's automatically calculating the number of shares I've got? So those numbers are changing based on how I'm pressing the buttons. And I made another couple bucks there, or well, a couple cents at least. So that is critical for me because I want to be able to trade without having to type in the number of shares I'm holding. So unfortunately, that puts Interactive Brokers Trader Workstation on the no list, and TradeStation, for that reason, well, they don't meet that standard. Neither does Thinkorswim, neither does E-Trade, neither do Robinhood, Fidelity, or IBKR Lite. And then the next is seeing halt levels and halt resumption quotes. So when a stock is about to be halted, I'll pull up Thinkorswim here. MLGO, this stock has an LULD, limit up, limit down, halt level at 460. That means if the stock goes to 460 right now, it'll halt up. If it drops to 377, it'll halt down. I need to know those prices. I'm trading volatile securities and I need to know if it's about to get halted. So if I can't see halt levels, that's going to be a problem. So essentially any platform that doesn't display halt levels is not going to be a platform an active trader is going to be able to use. Certainly if you're trading volatile stocks. Now, if you're trading large caps, which almost never halt, that's different. But if you're trading a strategy more similar to mine, then you're really going to need to trade. You're really going to need to see halt levels. So, all right. So now, so TradeStation is also out on that. Thinkorswim is out. E-Trade's out. These ones are all gone. And all we really have left here are the direct access brokers plus Webull. So Webull, to me, it really is a solid platform when it comes to UX. Now, from the UX perspective, we've now kind of narrowed this down to Interactive Brokers Pro doesn't kind of meet the standard, unfortunately. So they're going to be off the list as well. So now we're down to these 2, 4, 6, 7 brokers that are all fast execution, super fast, but charge a commission. And we're down to really like 3. And then Charles Schwab, only if you're willing to use DAS Trader and spend an extra $175 a month. And if you do that, I actually have another, let's see. I'm going to insert a column right here, and I'm going to just go, let's see. I'm going to insert a column, one to the left, and I'm going to add Schwab with DAS. There we go. Okay, so now when we add Charles Schwab using DAS Trader, yes, this is going to be an extra $175 a month, but all of these check out. So this is now something that we could say is doable. By the way, for those of you guys that are watching and are interested in learning more about my day trading strategy, I will put a link. I'll pin it to the top comments and I'll put it in the description where you can download my small account worksheet. It's a PDF that's going to walk you through my 5 criteria for stock selection, how I manage my risk, and I'm going to share with you some more details about the entry indicators and the exit indicators that I use to get in and out of my trades every single day. So if you're a beginner trader wanting to learn more about day trading strategy, you're welcome to download that free PDF as a resource. Okay, so you guys can check that out. Now there's another important point of comparison, and that is account size. You might have a broker that you would love to use, but their minimum account size is $25,000. So, well, that broker's off the list. So here's what I'm going to do. I'm going to begin ranking the best brokers, and I'm going to rank them based on category. And the first category will be best brokers for small accounts. Now, if you are a small account trader and you are located in the United States, you know that in order to day trade with a margin account where you would get typically 4 times leverage, you need a minimum of $25,000. Yes, of course, you could fund an account with cash, and with a cash account, if you take if it's a $2,000 account, you've got 1,000 shares of a $2 stock, that's $2,000 position. You take that trade, you close it, and you can't trade again until tomorrow because you got to wait for that trade to settle. So essentially you could take, like a couple trades a day, which is better than nothing, but it's not as much as most people would want to day trade. So a US trader, the best broker for small accounts, well, they're going to be international brokers. Now, these 3 are what I would say the best brokers for small accounts, and only 2 of them accept US traders. Ocean One Securities and CMEG, Capital Markets Elite Group. They accept US customers and they offer 6 times leverage. So with a $1,000 deposit, you've got $6,000 of buying power. Now, let me be the first to tell you that trading with leverage on borrowed money with a small account is very risky, and you really shouldn't do it. You should really practice instead in that cash account with small share size and only scale up to potentially using one of these brokers once you've already got a proven track record. So TradeZero International, they do offer 6 times leverage and they don't enforce the PDT rule, but they don't accept US residents. So if you're in the UK or you're in Europe or whatever, then you could open an account with TradeZero International with $500 and that would be fine. But they're not going to be a broker for US residents. Now, I suppose on that same note, I have another tab here of best brokers for international traders, and there'll be a couple others over there. So international traders do have more options, but for US traders with small accounts, you've got only 2 options, and they both score pretty similarly on the raw score of 1 to 10. A 7.75 for Ocean One. The only reason they score slightly higher is because the execution speed is so fast. The commission is a little higher than CMEG, and CMEG, so a little lower commission, but a little higher order speed. And the longer order speed with CMEG, most of the orders are very fast, but occasionally orders will lag. And I don't know why that is, but it does happen to me. So that's a little bit of a problem. And then Trade Zero, again, like I said, not a broker for US customers or US traders, but for international traders who want 6 times leverage and who don't want to be putting in $25,000 to be above the PDT rule. So these are my ranking of the best brokers for small accounts. Now let me give you my ranking of the best brokers for commission-free trading. When it comes to commission-free trading, Robinhood, Fidelity, Interactive Brokers, IBKR Lite, E-Trade Pro, and Charles Schwab using thinkorswim are pretty much out of the running. They're really not that great. Now, Charles Schwab is the only one that I would say, I know some of you guys like thinkorswim, and if it works for you, then by all means. But the fact that they don't have the hotkey offsets, they don't have the halt resumptions, the platform's not good enough for me. So I would give, honestly, the best score would be to Webull because their desktop software is phenomenal. And it's the 7.5 right out of the gates. That software is great. Yes, the order routing is a little slower, but that's what they disclose. In my own experience, it really wasn't that bad. So I think they're a great broker for a relatively small account, such as a cash account. If you've got a cash account, you could trade there. You run out of cash, you trade again the next day. You don't have to pay $175 for a platform fee. Charles Schwab, DAS Trader, $175 a month for that extra software, but it's a great platform. You get great price improvement. And this is a great one if you've got more than $25,000 and you're trading hundreds of thousands or even millions of shares a day, because you're going to get really nice price improvement. TradeStation, it's fast, but the platform, the UX, it's not as good as it could be. So the winner is Webull. The runner-up is Schwab using DAS Trader. And to be honest, if I was with Schwab using DAS Trader, I would be seriously considering some of the other brokers that are out there that do charge a commission but have faster execution, because I would wonder if that could make the difference in profitability. So that's something I would consider. Now, the next ranking, best brokers for Canadians. Now, I have a full breakaway episode for Canadians, so you can check that out if you haven't already. But this is going to be a similar ranking. Ocean One, they accept Canadians. Brokers like TradeStation, Charles Schwab, they don't accept Canadians. So you can't even trade there even if you want to. Trade Zero Canada, Webull Canada, Centerpoint Canada, $25,000, $30,000 minimum at Centerpoint Canada. And then Interactive Brokers is just not good enough. So it's on, honestly, I could take it off the list. It's just to me really not good. Well, I'll just leave it on there for right now, but that's the score. It's available for Canadians, but it's just not a good enough platform in my experience. And Rule 144, which I won't get into in a lot of depth here, is a rule that Interactive Brokers enforces. They're the only broker in the world that I've ever heard of that enforced this rule. And it's a major problem for people who are trading small caps. So Interactive Brokers, that's just not going to work. So if you're Canadian, Ocean One's probably going to be your best bet, or Webull. Webull charges $2.99 per trade. It's not commission-free in Canada, and it's still a little slower. But if you did 100,000 shares with Webull, it's only $2.99. 100,000 share trade with Ocean One with the commissions is actually $200. So Webull would be cheaper in Canada if you're trading with bigger share size. Okay, so this is the ranking of the best brokers for Canadians. Now, the best brokers for international traders. We're going to split them between your small account brokers, in which case you've got Ocean One, CMEG, Trade Zero International, and Webull. These are small account brokers. They don't enforce the PDT rule if you're not a U.S. resident. So Webull doesn't enforce the PDT rule in Canada. It doesn't enforce it in other jurisdictions except in the United States. So this is for international traders. So these are your top 4, and they all score similarly. It's really going to come down to a question of commission structure. Webull commissions can be really good in some places and can be really expensive in other places, so you've got to check where you're located at your branch. Trade Zero International, it's the same. CMEG, Ocean One. Ocean One generally right now is the preferable platform. Now, international traders with large accounts cannot use any U.S. broker-dealers that do payment for order flow. You can't use thinkorswim, you can't use TradeStation, you can't use Robinhood, not that you'd want to, but you're not allowed to. So if you've got a larger account, Lightspeed Trading is going to be one of the fastest platforms and has the best UX. If you are a short seller, you may be interested in one of these 3. And now let's go to the next ranking, which is the best platforms for short sellers. Guardian, Centerpoint, Cobra Trading, these are the top. These all require minimum $25,000, $30,000 accounts. So they're more expensive to create the account, but they're great for short sellers. Ocean One, small account broker, also has great availability of shares to borrow. TradeZero International and TradeZero USA, $25,000 minimum account size. I'm actually going to change that to red, $25,000. So for a small account short seller, TradeZero or Ocean One will be probably your preference. For large account short sellers, Guardian, Centerpoint, Cobra are going to be the tops. All of these are great for international traders, and Centerpoint accepts Canadians with Centerpoint Canada. So I could actually, I'll just add another column right here, and we'll drop in the Centerpoint Canada, because Centerpoint Canada and Centerpoint USA are the same company. They just have the two sister branches. So popular there for Canadians there with Centerpoint Canada. And with that, I have now given you a comprehensive ranking of what I think are the best brokers for day trading. Across the board, if we're going to talk about who gets sort of the award, if on my master sheet right here, it's Lightspeed Trading with a score of 9. They are the highest scoring broker-dealer. Again, I have no affiliate relationship with them. I just think they're a great platform. They're really solid. And then the rest, you can see kind of as the ranking goes down. Interactive Brokers will move that back over into a spot there. And this is how it all ranks out. So if you are interested in learning more about my strategy, make sure you check out my small account PDF linked in the comments down below and pinned to the top comment and linked in the description. If you're interested in having me do a platform demo or a broker review of one of these platforms that you haven't seen, leave that as a note for me in the comments. I have done breakaway episodes on almost all of these brokers, so full-length platform demos. So if you're interested in learning more about one of those, you could check out one of those episodes that is an even deeper dive. And if you enjoyed today's ranking, I hope you hit the thumbs up and subscribe to the channel. Thank you as always for tuning in, and I'll see you for the next upload real soon.